Hey guys, it's Monday. Happy Monday. I am sitting on the patio enjoying the wonderful weather that we have here in Phoenix. Right now it is 82 degrees, but I would argue in the shade it is much nicer than that. You can ask Cleo what the sun is like because she's over there enjoying a little bit of time in the sun. And then we've got Zoe who chose to be in the shade with her ball. Not surprising. What might be surprising is this hat. Many of you might be surprised to see me sporting something like that. Just kidding. Just a Monday joke. Anyway, welcome to my channel if this is your first time. I am Caitlin McKegg. I am a real estate broker here in the Phoenix area. And every Monday I give an update on what's going on in the Phoenix real estate market. I also post other videos about living in Phoenix, home tours, and all of that fun stuff. So if that's interesting to you, make sure you subscribe now so you don't miss any of that info. So let's jump into what we're talking about today. I wanted to give a good, bad, and ugly report of what's going on in our market. And a lot of the information that I get is from the Cromford report, which I subscribe to and follow. And what they do is they analyze data in the MLS here in Phoenix and give that data to their subscribers to be able to educate their clients about what's going on in the market. So I follow the Cromford report very closely. They also know a lot about what's going on in the economic landscape, not only locally, but nationally, and how that will affect housing. So today I got a great update from them and wanted to cover both the negative factors and the positive factors that are going on in the market, not just here, but nationally as well. So that's what I'm gonna go through today, and hopefully all of that will be really helpful for you. So let's go through all these indicators. I'm gonna be checking my notes, so don't mind me peeking over here. Let's start with the negative first, okay? So on the negative side, this is one thing we've talked about in the past, is affordability. So that is a negative indicator where we stand today. Our affordability has continued to go down, and right now, I think it was last quarter, because this is measured on a quarterly basis. Last quarter was the first time that it really fell out of the normal range and into a low range, the first time in a while. So that is a negative indicator, not only here in Phoenix, that's happened nationally as well, but also specifically in our market. Next, we have our household formations. So household formations are shrinking. What that means is we have two households that become one. So maybe people decide to get roommates. Maybe people are getting married and moving in together. And what happens is when two households become one of those households will go up for rent or to buy, either way. And so that starts to increase our supply. Where we're at today, that's a good thing. We need some supply increases, but overall, the more times that happens, when we have supply that's higher than our demand, we all know that creates a different kind of market where prices can go down. So right now, that's not a huge risk, but that is one of the more negative factors if we're going to start looking at what's negative versus positive. Also, they mentioned that our sales for Q4 are down compared to last year in Q4. So it remains to be seen where we head from here, but sales in fourth quarter in Phoenix are lower than last year. And our payments, so monthly payments if you're a homeowner, are up 33% from last year at this time for the same type of property. And that's mainly based on price increases. We've also had some interest rate increases that are very slight, but mainly those price increases. So 33% higher, again, that ties in with affordability. Also, our rents are up 20% from last year at this time. So those are two other pieces of the puzzle where it starts to show that things are not super affordable for a lot of people when you're having that massive of an increase year over year. So let's talk about the positive things. So lending has started to loosen up a little bit. Specifically, I mentioned about a month ago or so that the loan limit has increased, and going into 2022, most lenders are going to be increasing that loan limit. So that is a positive thing, you know, because that allows people to have the ability to purchase a home when maybe the loan limit wasn't high enough for them to use the same down payment and get into the same type of thing. So that's a positive thing that will spur more activity in the market. Also, corporate profits are positive. That's good mainly as we look at the luxury market. Again, when corporate profits are good, that spurs more activity in the real estate market. Inbound relocation and population. Specifically here for Phoenix, we are getting a huge amount of inbound relocation and population growth. And all of that is good for our market because it continues the demand. Again, we're in a situation right now where we don't have enough supply to meet that demand, but that's what's caused positive price appreciation in the market as well. So when we're looking at a healthy market where we have increasing home values, not decreasing home values, an increased population and inbound migration is a positive thing to see. We also have our jobs here in Phoenix. Jobs have recovered over 100% from where they were before the pandemic. So that's huge. Not everywhere in the US can say anything close to that. So being able to say that here in Phoenix is a huge win for us. Our incomes are up 3.4% compared to last year. That's based on W-2 incomes here in Phoenix. And unemployment claims are near pre-pandemic levels. So that's another great thing for us here. So those are all the positive things that are happening in the market in general that will positively affect the real estate market. But again, there are some negative things and some concerns to watch out for. So that's the good, the bad, and the ugly that I'm able to share with you today. Now, I want to talk briefly about the market index, which we talk about every week. So the Cromford Market Index, if this is your first time here, it is an indicator that the Cromford report uses to really determine price appreciation and where prices are headed in our market. And what they do with that information is, again, give it to their subscribers to be able to use with their clients and help us understand supply and demand factors in the market. So let me pull this up right here. I ended up actually accidentally getting out of it. So here we are. So today we sit at 351.5 on the Cromford Market Index, and any number over 110 is a seller's market. So this has actually been increasing very, very slightly over the last few weeks, but it has been increasing, and that's mainly due to the demand that we're seeing. Our demand factor is 22.6% above normal. Our supply index is sitting about 65% below normal. So we have a huge disparity between the supply available and the demand in our market. And so because of that, that increases prices, and that's where that 351 number comes in, showing that we're in a seller's market and where demand outweighs the supply. Now, a lot of that demand, I've talked about this before, is from iBuyers or instant buyers or large investors also. We're seeing a ton of activity in our market due to that. So without that kind of activity, where our real demand might sit maybe a little bit lower, but either way, our demand is certainly on the high side right now, and really the factor that's pushing us towards further into the seller's market. So we'll see how that continues. Right now, supply is kind of staying stable, and typically this time of year we start to see a seasonal shift where fewer homes come to the market and we kind of decline through the rest of the year, with those homes on the market kind of decreasing just because people get distracted with the holidays. So we'll see if that pattern continues this year and how that's going to be affected by demand as well, if demand stays strong over the next month and a half. But your guess is as good as mine on that. So Anyway, I hope all this info is helpful for you. If you have any specific questions, comment below, let me know, or check the description below. My contact info is in there and you can reach me that way with any questions that you might have. Thanks for hanging out with me today. I'll be back later this week with either a tale from the trenches or a home tour. I'm not quite sure yet, so stay tuned to find out. Have a great week.